Welcome, financial enthusiasts and curious minds alike. You've found your way to Financedevil, your reliable guide to the world of finance. We're all about empowering you with knowledge, demystifying the complex world of finance, and helping you make informed decisions. Today's topic: improving credit scores. This elusive number can have a profound impact on your financial well-being. Today, we're diving deep into the world of credit scores. Ready to boost your financial health? Let's get started. To improve our credit score, we first need to understand what it is. A credit score is essentially a numerical representation of your creditworthiness. Or in simpler terms, it's a measure of how likely you are to pay back a loan. It's immensely important as it influences not only your ability to obtain credit, but also the terms and interest rates you're offered. Now, what affects this score, you ask? Multiple factors, including your payment history, the amount of debt you owe, the length of your credit history, and the types of credit you're using. Three major credit bureaus, Experian, Equifax, and TransUnion, are in charge of collecting this information and calculating your credit score. Though each bureau may have a slightly different calculation, they all consider the same factors. Now that we know what a credit score is and why it matters, we can start taking steps to improve it. Improving your credit score may seem daunting, but with a step-by-step approach, it becomes manageable. Let's break it down together. First up, you need to check your credit report for errors. You'd be surprised how often mistakes occur. These errors may include incorrect personal information, outdated account statuses, or even fraudulent activity. You're entitled to a free credit report from each of the three major credit bureaus every year. Take advantage of this, scrutinize your report, and if you find any errors, dispute them immediately. Next, focus on paying your bills on time. This might sound like a no-brainer, but timely payments are a major component of your credit score. If you're having trouble remembering due dates, consider setting up automatic payments or reminders. A single late payment can significantly impact your credit score, so it's crucial to stay on top of this. Thirdly, work on reducing your debt. Your credit utilization ratio, which is the amount of your total credit you're using, plays a big role in your credit score. Aim to keep your credit utilization below 30%. This shows lenders you're responsible with your credit and not overextending yourself. Now let's talk about old credit cards. You might think that closing an old or unused credit card would be beneficial for your credit score. However, this isn't necessarily the case. Closing a credit card can reduce your overall credit limit, which can increase your credit utilization ratio. So, as long as it's not costing you an annual fees, it might be best to keep that old card open. Lastly, aim to diversify your credit. Having a mix of credit types such as credit cards, retail accounts, installment loans, finance company accounts, and mortgage loans can also boost your credit score. But remember, don't open accounts you don't need, as this could lead to unnecessary debt. By following these steps consistently, you can see a significant improvement in your credit score over time. Let's do a quick recap of what we've learned today. We started by understanding what credit scores are. These are numerical expressions based on a level analysis of a person's credit files, representing the credit worthiness of an individual. In simpler terms, it's a grade for how well you manage your financial obligations. We also discussed why credit scores are important. They play a significant role when lenders decide whether to offer you credit or loans and the terms they offer. A high credit score can make it easier to get approved for the best credit cards, lowest interest rates, and favorable loan terms. Then we moved on to steps for improving your credit scores. It all begins with checking your credit reports for any errors that might be pulling your scores down. Next, it's about paying your bills on time, reducing the amount of debt you owe, and maintaining a low balance on your credit cards. It's also crucial not to close unused credit cards as long as they're not costing you money in annual fees. Finally, apply for and open new credit accounts only as needed. Remember, improving your credit score is a marathon, not a sprint. Stay patient, stay consistent, and you'll see results. That's it for today on Financedevil. Stay financially savvy.